Bitcoin is going to become more scarce than gold because, unlike gold, Bitcoin cannot respond to an increase in price and mine any more than is mathematically metered now. Gold, however, can respond to the increase in price that it has enjoyed, and we are seeing new mines opening up, the higher cost mines, to try and get more supply out. And I think people are beginning to understand this distinction when it comes to scarcity value. We're at right now roughly 21 million units, or Bitcoin, having been mined in history. And that number is only going up to 21 million. It cannot go beyond that. And so I think more people are doing the math and saying, oh my goodness, this is a new asset class.
Bitcoin is now more scarce than gold, and that changes everything. As Cathie Wood explains, gold miners can always dig more when prices rise, but Bitcoin's supply is locked, mathematically capped at 21 million. That makes it the most rigidly scarce asset in human history. With institutional investors waking up to this fact, we're entering a new financial era. Not only is Bitcoin digitally scarce, but it's also riding three unstoppable waves: the internet revolution, a return to rules-based money, and the emergence of a brand new asset class. Bitcoin isn't just a hedge, it's the foundation of tomorrow's global financial architecture. More and more institutions are doing the math and realizing they hold zero Bitcoin while the network strengthens daily.
Subscribe to Daily Bitcoin Trends for expert insights, real-time market updates, and proven crypto strategies. No hype, just smart analysis to help you make better decisions in crypto.
I, as an institution, don't have much exposure. Bitcoin has the most secure network, and it's taking advantage of three powerful revolutions. It's a technology revolution, really the next generation of the internet, putting the native currencies into the internet. The developers did not do this in the late 80s, early 90s, when they were evolving the internet, because they didn't know that finance and commerce would take place on the internet. So that's a revolution. It's a global rules-based monetary system. Really the first one since the U.S. closed the gold window in 1971. That's a very big idea. And it is a new asset class. And it's that last phenomenon or revolution that is beginning to take hold now because there's real scarcity value. 1 million more Bitcoin will be mined, and that's it. So scarcity value is scarcity value. And the most interesting thing about Bitcoin is after the halving last year, which means the supply growth of Bitcoin was cut in half to roughly 0.9% on average per year. That dropped the supply growth of Bitcoin below the long-term supply growth of gold. And a lot of people understand the scarcity value when it comes to gold. Bitcoin is going to become more scarce than gold because, unlike gold, Bitcoin cannot respond to an increase in price and mine any more than is mathematically metered now. Gold, however, can respond to the increase in price that it has enjoyed, and we are seeing new mines opening up, the higher cost mines, to try and get more supply out. And I think people are beginning to understand this distinction when it comes to scarcity value. So what I'd like first to is to address the longer term target. So the number you mentioned, somewhere in the 2.4 to 2.9 million range, would be if investors were to use the optimal allocation towards Bitcoin based on its history. And that, of course, is a big number. I think it's close to 20%. No one's going to do that, at least not now. However, if if you look at our big ideas 2025, you'll see that our bull case for Bitcoin in 2030 is closer to 1.5 million, still more than tenfold from where we are today. And our confidence has increased as the institutional interest has increased. In terms of a one-year forecast, that's very difficult. We don't do those. However, I will tell you, we have an on-chain analytics expert, David Puel, who has 4 main indicators right now that are still pointing to a bull market. And we've just had a major breakout. I think many of the technicals were beginning to look a little iffy or shaky, and they have now been cleared. Those hurdles have been cleared. So we think that for the next year, that this bull market will remain intact.
Cathie Wood's ARK Invest believes we're heading toward a $1.5 million Bitcoin by 2030. Why? Because math is math. Bitcoin's annual supply growth is now just 0.9%, lower than gold's, and unlike gold, no amount of demand can increase production. The recent halving made Bitcoin scarcer than ever. With institutional ETF adoption growing and on-chain analytics pointing to a continued bull cycle, the case for Bitcoin keeps getting stronger. Major players like MicroStrategy and Tesla are embracing the scarcity trade, and Cathie's team believes we're still in the early innings. Bitcoin is no longer just a curiosity, it's being institutionalized. And unlike bonds or cash, which lose value over time, Bitcoin aligns with the new internet-native, rules-based economy.
I think what is happening here, it started with the spot Bitcoin ETFs. We're very proud to have one of the largest here in the United States, ARKB. That began the institutionalization of Bitcoin, the Bitcoin market, and other crypto markets, other digital assets. And I think many people are now tuning into the arithmetic. I actually posted on X, math is math, and math is mathin'. And what that means is we're at right now roughly 21 million units, or Bitcoin, having been mined in history. And that number is only going up to 21 million. It cannot go beyond that. And so I think more people are doing the math and saying, oh my goodness, this is a new asset class. We think the bigger opportunities, meaning they're not as well understood, are in the embodied AI space. And by that we mean AI as it impacts the physical world. We think the biggest application of AI is in the autonomous mobility realm. Many people know that as robotaxis. And we think that is, during the next 5 to 10 years, that will scale to an $8 to $10 trillion opportunity globally for the entire ecosystem, with the biggest beneficiaries, the network providers, accounting for half of that, so $4 to $5 trillion in revenue from essentially nothing now. The biggest robotaxi network out there, we believe, will be Tesla. Now, it is not yet. Waymo really has that. I would say has that mantle, but we believe that Waymo's solution is too high cost, and that it will give way to Tesla's lower cost solution over time. We think that the autonomous opportunity will submit to natural geographic monopolies. We don't know who that will be in Europe or China. We know Pony AI and others are going for it, nor do we know what it will be in Japan. We know that Tesla would like to enter those markets, but in this world, it's winner take most. The company getting passengers from point A to point B the fastest, the safest, and the least expensively is probably going to win. So lots of markets are up for grabs there. So that's the first embodied AI opportunity. The second is in healthcare. We think that the most profound applications of AI during the next 5 to 10 years are going to be in healthcare. We see already that there are diagnostic tools, diagnostic tests that are able to identify and diagnose cancer in stage 1. We're seeing this in one of our private companies, Freenome, able to use blood tests to diagnose colorectal cancer in stage 1. We have other tests out, the testing companies out there, Exact Sciences, Guardant Health, also in the run for that competition. We see research and discovery being transformed by AI. AI is going to shrink the time from conception to market to create a new drug from 13 years on average now to 8 years and ultimately 5 years, we believe. And what's been very gratifying here in the United States is the FDA, the top regulator, is aiming to help with that process. So it is blessing the use of AI in research and discovery. And we also think that the cost of discovering a new drug, including all the failures, will drop from $2.4 billion for one drug down to $600 million, which is going to transform healthcare. And then the third general category that we think is going to transform healthcare is curing disease. So the convergence of various sequencing technologies with artificial intelligence and new technologies like CRISPR gene editing and other gene therapies is already starting to cure diseases, sickle cell disease and beta thalassemia. So CRISPR Therapeutics has launched those two products, and they have already started generating revenues and curing people. So these are profound changes that we don't think investors have priced correctly into the market yet.
Bitcoin is the lead story, but Cathie Wood also sees AI transforming everything from mobility to medicine. Tesla could dominate robo-taxes, AI will help detect cancer earlier, design drugs faster, and slash R&D costs. But while these markets grow, Bitcoin is already maturing. It's the first asset that's truly internet native, unchanging, and fully decentralized. As institutions rush to find real scarcity, Bitcoin stands apart. Gold can be mined. Real estate is overpriced. Bonds are broken. Only Bitcoin delivers security, scarcity, and explosive upside. Cathie's forecast? Most investors haven't priced any of this in yet. But soon they will, and when they do, demand will far exceed the final million coins yet to be mined.